it's a kind of a good diversifier that doesn't drag too much on a portfolio when times are good in the stock market, but can help kind of shield some of the shocks in a bear market.
Hello, you're watching Proactive. Joining me in the studio today is Stuart O'Reilly. He is private wealth consultant at the Royal Mint. Stuart, very good to have you in the studio.
Oh, good to be here.
So Stuart, gold has reached record highs this year. What's been driving that performance, and do you think the outlook remains positive?
Yeah, for a safe haven asset, or perceived safe haven asset, gold's had a pretty wild 18 months really. So it was up 67% last year in dollars, and then it kind of went parabolic in January, hitting $5,000 and surging past that. It's cooled off a bit since then. I think partly because the speculators maybe are out of the market. There's a little bit of central bank selling, which weighed on the price a little bit, but it feels like a bit of a healthier level. But the things that were driving it really is geopolitical uncertainty. So not just the kind of war in Iran that we're seeing at the moment, but the wider realignment, I think, of different allies across the world, different power blocks emerging, and what that might mean going forward. And as a result of that, central banks have been buying a lot of gold. It started particularly after Russia invaded Ukraine in 2022, and we've seen really elevated levels of central bank buying since then. Not just from allies of Russia, but also from countries like Poland and the Czech Republic, so countries that are close enough to Russia, but outside the Eurozone. And also from the kind of traditionally non-aligned states who saw the sanctions applied to Russia cutting out the SWIFT system and thought that gold is a kind of a good political hedge, if nothing else.
As you mentioned, people think of gold as a safe haven. What role can it play in a portfolio during periods of uncertainty?
So often it tends to be inversely correlated with the stock market, particularly that is when you see a shock in the stock market. So when the S&P 500 is significantly down, gold tends to go the other way and tends to rise. The great thing though is historically, when the S&P 500 has been significantly up, gold has actually been correlated with the S&P 500, so has also been up. So in that way, it's a kind of a good diversifier that doesn't drag too much on a portfolio when times are good in the stock market, but can help kind of shield some of the shocks in a bear market. It's also great for liquidity historically. So what you tend to see is when you see a shock in the stock market, you'll often see immediately some selling of gold, and the gold price might dip with everything else. But it's being used as liquidity to meet margin calls, and then over the longer term, when you've seen those shocks, what we've seen in the past is gold can then start to rise from there as people buy it as a safe haven asset.
How has investor demand for physical gold changed in recent years, and what trends are you seeing today?
I think if you talked about gold 10, 15 years ago, people would generally think of banks, they might think of high net worth investors, and sometimes they might think of coin collectors. And outside of that group, not very many people kind of knew about gold, knew how to access gold, but the market has definitely broadened and gold has kind of democratized as a result. So certainly in our own customer base of people buying physical gold, we're seeing a lot more younger customers coming through, and they're not spending the levels perhaps of some of the older investors, maybe because they're just not earning the same level, but they're definitely interested in gold. Women as well is a really big growth area for us. It wasn't too long ago that actually only 9% of our customer base was female, and that was fairly typical across Europe. We're now surging past 25, 26% in terms of women buying gold. So it's becoming a much broader market. And I think that's because gold's proven kind of role in a portfolio over the past few years, with everything that's happened with COVID, with the invasion of Ukraine, and what's going on at the moment with interest and inflation, people have really seen the value of gold in a portfolio, and that's what's caused it to democratize and broaden.
Sustainability is becoming more important to investors, Stuart. How is responsible sourcing changing the precious metals markets, and why should people care?
So in 2012, the industry body that oversees all of the major global refiners introduced some mandatory measures for all of the refiners that made sure they were conscious of where the gold was being sourced. So provenance became really important. in 2019, they introduced environmental measures for the first time, making sure that both on climate change and on the broader environment, refiners were acting in a responsible way. So there are now products in the market that are entirely made of recycled gold and also from responsibly sourced gold, and not just kind of any gold from historically that could have circulated.
Some investors are put off by the idea of buying and storing physical gold themselves. What are the different options that people can use to invest in gold without holding gold, and what's the key considerations?
Yeah, I think you'd be amazed at the amount of people who invest in gold who don't really think twice about where it's stored. So a lot of gold is stored in two main banks in London, particularly gold that forms part of ETCs and ETFs globally. Outside of that, lots of central banks also like to store within the confines of the M25. The Royal Mint has its own vault. We're actually in South Wales now. It's a vault that was purpose-built at a time the Ministry of Defence were protecting the site. And people like the diversification, not just of gold, but diversification of custody as well, outside a major population centre, which is perceived by some as perhaps carrying a bit less risk than storing it all in the same place.
Finally, looking ahead, Stuart, with inflation, interest rates and geopolitical uncertainty, what sort of role do you think gold should play in a portfolio?
So there's three key roles that gold has tended to play in portfolios. One is diversification, so hedging against that next shock that might come, or just helping balance the portfolio and increase risk-adjusted returns over time. The other is liquidity. So when something does happen, you can sell gold to cover your positions, and it's a really deep and liquid market. And actually the third one is returns. So at the end of last year, gold's 10-year compound annual growth rate was 15% a year, which outperforms lots of the kind of major indices and lots of other asset classes. So diversification, liquidity and returns.
Stuart, thank you very much for coming in and sharing your insights.
Thank you.
That's Stuart O'Reilly. He is private wealth consultant at the Royal Mint.